Welcome to the EmpowerYou Financial podcast. I am your host, CEO and founder, EmpowerYou Financial, Eva Palacios, where we teach you how to live life on your own terms through financial literacy and credit education. What's up, guys? We are back, and we got David.
What up?
My secret little ammunition in my back pocket.
Yeah. How you doing? Good to be back.
Yes. And I know last week, we talked about, the basics of life insurance and what people should consider and what people should think about. And man, lots of great feedback. Yeah. So many people in the DMs. I know. Like, I seriously got to level up. Somebody's got to take over my social media because, I just got too much.
Right. Delegate. That's when we start elevating. You start to delegate all the things so you can focus on what you specialize in.
That right there is a gem. If you want to elevate, you got to delegate.
Make a shirt. Put that on a shirt.
Put it on a shirt. Okay. This episode's going to be a hot topic. Because I remember even before knowing you, I kept hearing and social media and then it's like, I don't know if what they're saying is true. Like, it sounds too good to be true. But I kept hearing this concept of BYOB.
Yep.
And it's the be your own bank. And I thought to myself, wait, what? Okay, you must have to have a lot of money to be your own bank. Let's be real. You can't lend money if you don't got that much money. But when you were saying, no, it actually is far easy than what people think it to be. Mm-hmm. I'm like, okay, David, we need to talk about this and we need to share it with the community. So let's just dig deep. Let's dig deep and let's talk about how insurance policies you can use as leverage to be your own bank.
Yep, and that's the key part. Like you said, you have to have a lot of money. Well, you don't have to, right? You have to customize a plan tailored to you, your age, your income, your assets, whatever. Because my goal, this is what I specialize in, right? BYOB, helping people become their own bank.
I know, David right now is really excited. He's like, this is my jam. I can't wait.
Yeah, this is my language. Everything else, but this is where I spend most of my time at, right? And so when we think about it, the banks always win, right? I seen this video where if I take $50 to my barber, right, cash, and that barber takes $50 and takes it to the grocery store, that grocer takes that same $50 and takes it and buys something for the house, right? And just that, if that $50 goes through 20 to 30 different transactions, that $50 stays $50, right? Same value.
Yep.
But if I go to my barber and use my credit card, there's a 1.5% transaction fee that goes to the bank. Yeah. And then the barber goes to buy groceries, another 1.5% transaction fee to the bank. So after 20 or 30 transactions, that same $50, the bank profits 1.5 per transaction that's made. So if the banks are always winning, how do we customize and become our own bank?
Yes.
Right? So this is where, understanding the concept of the banking strategy, right? All it really means is just like you put money in a bank, right? You put money into a policy now, right? And just like a bank can lend you money, well, now you can lend yourself your own money. But that word lend, right? That word creating debt, right? Is very new to us middle-class people. We don't like debt. We don't like borrowing money. We don't have to pay people back. So this is where customizing and understanding what borrowing your money really means, because the wealthy do it. Well, if the wealthy do it, there must be some good side to it, right? So learning how to leverage your money and see how you can still profit from borrowing your own money. And if your policy is structured the right way, you don't have to pay back every loan you borrow from your policy.
Okay, hold on. Why would I want to borrow my own money? Why not just keep it, me pay and just it accumulate and it looks nice and pretty and safe and I'm secure because I know when I'm no longer here, I'm doing it for the boys.
Yeah.
So why would I even want to touch that money?
Yep. So the key thing is understanding when you borrow money, the reason why you're borrowing money is either to make more money or maybe get rid of debt, right? So you're borrowing money to leverage. And the reason why you borrow instead of withdraw, and let's just use an average, let's say your money is growing on average 10%. Okay, I'm gonna use an easy number so I can do math without a calculator, right? So you're gonna leave your money in your policy to let it grow 10% tax-free, and you're gonna borrow your money at a 4% rate, right? So you're paying to borrow your money. Again, every loan you borrow from your policy is collateralized to your death benefit, meaning if you don't pay that loan back, your death benefit will pay for it when you pass away. So in essence, you're borrowing money so your money can stay in the policy, compounding every year at a much higher return. Yeah, so some examples I help clients do is, the easiest one I can think of that relates to what you help people do is debt consolidation, right? How many of you guys ever took a debt consolidation loan, whether it's 10, 15, 20% to get rid of this huge 23% interest of credit card debt, right? Typically they fall in the range of 10 to 15%, but also it's a very high monthly premium.
Yes.
Right. So what I help some clients do, one example is they had $10,000 of outstanding debt at a 23% rate. So she borrowed $10,000 from her policy at a 3% rate. Now, which loan would you rather have? Would you rather have a 16% interest rate loan or debt or a 3%?
Man.
Right. So that's where
that's game.
Yeah.
That's game.
So she borrowed that money from her policy, paid off that debt that was a high 23% interest. But also, since she paid off that debt, her credit score jumped up.
Yeah. Yes.
Right.
I'm like, David, I don't think anybody believes me. Like, I don't think nobody, no, I do know there are people out there that believe me, but I don't really think people understand the power behind having this type of information and using it as leverage. Because yes, it's the bad past traumas, right? The how we were raised, don't use credit cards. They the devil. You get in a credit card debt. Oh no, now you in trouble. Yes, it can affect your credit score, but there are tools that are available like this that not only are saving you money in interest because in essence, you're borrowing from yourself at a 4% versus the 23% versus the debt consolidation loans that do average between 10 and 15%. There are some debt consolidation loans that can go lower, but let's be real. If your credit score is shot, you're not going to get those rates.
Right. Yep.
So there's always tools. The question is what's going to be the best tool for your situation? So yes, saving money on interest. Now credit score is higher. There's a third part. You know what that third part is?
What's that?
You are paying off debt on a credit report, which now lowers your debt to income ratio, right? Let's just pretend you owed $20,000 on a credit report, on a credit card that's maxed out. Credit score jumps. $20,000 is no longer on your credit report. It's with you in your own bank in a life plan. They don't report to credit bureaus.
Nope.
They don't report to credit bureaus. So now you look even better on paper. So then when you want to go do the bigger and better stuff, your numbers look amazing.
Yep. And so let's give another example, right? So let's say we have two credit cards of $10,000 that we're looking to pay off, right? We borrowed $10,000 from that 3% loan from the policy to pay off one credit card. Shoot, I still have this other credit card. Well, the cool thing about when you borrow money from your policy, there's no obligated monthly payment plan. So now you use the payment you were paying the first credit card with and now pay off that other credit card because that credit card is a much higher interest than the loan you took out from your policy. Man. Once you wipe away the debt and now you pay back the debt you took out of your or the loan you took out of your policy because the purpose of that loan was to pay off debt. All right, let's pay yourself back as if you are a bank. And this whole time while you're doing all that, the original $10,000 you borrowed is still growing and working for you in your policy.
Yep.
All right. So break it down numbers, right? $10,000. Would you pay $300 to profit $1,000? Right now you're thinking like a business owner, right? Would I pay an employee $300 so I can profit $1,000? Right? I can make $1,000 all by myself, but if I learn to delegate, pay someone $300, would I pay someone $300 to profit $1,000? Right? That's what we're doing with our policy. We're borrowing money so we can leverage it. And now it's working in two places. It's working in our policy and it's working on our credit report.
Man, I'm telling you guys, like the stuff that is in my head that I'm like, we need to get this information out there. But I mean, many of you may be like, that sounds cool, but that ain't me. That ain't for me. You don't know until someone is sitting with you to customize these plans. Hence why I'm different compared to everybody else. Like, I am looking at your situation and game planning your financial future to put you in the best possible position to win. And not just win with the higher credit score, not just win with buying the house, not just win with planning for retirement, but like win-win to where now we're our own banks.
Yeah.
Now we're our own banks. So that's one great example. You can use it to consolidate, pay off debt, which not only helps with your budget, helps with your credit scores, and lowers debt to income ratios on paper. Excellent.
Yeah. And again, be your own bank. What do our kids have? Our kids have piggy banks, right? Whether they have characters, whether they have a drawer, a shoebox, whatever the case is. So again, going back to our household, we talk about life insurance in a different way, right? We don't even talk about death. And no one should. It's not a death insurance. It's life insurance. So we got to figure out, how do we utilize this tool in life? And so all of our kids understand it as their piggy bank, right? My son, actually, right before I came over here, the same son, Grayson, he said, "Hey, Dad, when are you going to put that $100 from my piggy bank to my policy bank?" And I'm like, I know. You're right. I gotta get over to the bank, put the money in there, then move it over to your policy. I'm sorry, it's taken a while, but I love it. They're saving into it. Again, you get the grandparents on board. They, instead of buying clothes, toys, they're like, you know what? I'd rather buy them something that has value, or use this money for something that has value. Let me add to it also. So now holiday money, birthday money, Christmas money, whatever the case is, they're giving me their money to put in their policy now, because they understand, though they don't understand fully, they just understand it as a savings for them, like a piggy bank, but that actually earns them interest, because I go over with them, how the money grows. Would you rather have $10 today and have it $10 next year, or would you rather have it grow to $11 or $15 or $20? What would you prefer? And they're like, what do you mean? Right? They don't understand it fully. Like, yeah, I like that because it's more. They don't need to understand all the details, but we're just building those habits, right? Building those habits of saving, investing for their future, something that we didn't really take on until our mid to late 20s, early 30s, mid 30s. So just having these conversations sooner.
I want to talk about that, right? Because, I don't know. Like, I know for me as a parent, there are certain things that I want to make sure my boys learn and carry on with them as they grow older. And I just remember one day on social media, you took this picture with the kids and they all had their cute little policy folders. And I'm like, okay, hold the phone. And they're little babies. And I'm like, what? Okay, why are we getting policies out on our kids? And I instantly thought, okay, if he's doing it, I got to do it too. But I know there's a lot of people that are like, why am I going to insure my kids? Again, we don't know when people pass, but we assume they're 5, they're 10, like they got long lives. I don't think I can afford to put a policy for the next, 80 years. Or 2, I got time, so I'm just going to push it off and put it out till later. Why should we be taking out policies for our kids?
Yeah. Again, protection is the key part, right? But I want to talk about that first, because it's, these injuries, these illnesses, they don't discriminate on our age.
That's right.
Right. And imagine, I'm going to use an example from another business partner where his niece actually suffered a terminal illness. Right. And the parents were 2 working parents. And if they took time away from work to focus on their kid to take to the hospital and everything, they lose income. How are they going to keep providing for that household? Right. So that's where they were able to accelerate and utilize those living protection benefits in life and take time away from work and spend every moment with their daughter to take to alternative treatment and different things of that sort. So there is the protection side of it, but also where we're focused at is the cash value. Like we talked about, the indexing, right? Having their money grow long-term. End goal, college savings, right? Some people think about college saving as a 5-9 plan, right? Another great option, right? Another great option, but it may not align with what you want to accomplish with your savings, right? Because 5-9 is volatile with the market, goes up and down, up and down. If your kid does not go to college, you're taxed for it, right? So again, we're talking about flexibility and options, where now we're saving into the IUL for long-term for college, if they don't go to college, maybe they want to start a business, that money's in there for them to utilize for that business. Right? That money's there to utilize for that first house or investment or wedding or even now early tax-free retirement because we started something at a young age.
Wow.
Right. And then what actually had a meeting with the family a couple of weeks ago. Like, what about the in-between, right? We understand college is on the horizon, but what about private school? We want to send our kids to Catholic school. That's not cheap. Or that's not cheap, right? Yeah. $10,000 a year. Can this policy be customized for my 8-year-old to pay for her college, or I'm sorry, for her private school? Yeah. And I said, yes, right? As long as we customize. So this is where, if you guys are getting quotes, stop getting quotes for life insurance.
Generic quotes.
Right? We need to customize and tailor your plan. Show you the contributions are flexible. You can increase it, reduce it, but again, it has to have a purpose for what you're saving for.
Absolutely.
Right.
And that's so important because I do get a lot of those messages. You know, Eva, I'm 65 and, you know, and I have this policy and I pay X amount of dollars per month. Like, what better can you get me? And I'm like, well, let's set up a call because that is not enough information. Yeah. Like, you could be 60. You're very well 65, but I don't know, like, how much income do you want to receive later on when you stop working? Because that's really what we need to be focusing on. Yeah. Is what am I paying into by the time I plan on retiring so that I can not only, you know, supplement the income, but like, you know what, guess what? Like, realistically, that paycheck, that's not enough. Like, I want more. I want $5,000 a month. I want $10,000 a month. I want $50,000 a month.
Right.
You can customize it if that's what you want or if that's what you need. But what I love what you said about the kids, I don't know about you guys out there. I want to be able to provide my kids with what was never taught to me. And it's obviously it's great that I do what I do. And yes, we are building generational wealth. But at the same time, like if we can put money into a policy to where now we can use that to buy their first house. That's huge. Because guys, if you don't, you know, go back a couple episodes where I talk about sacrificing, how me and my late husband sacrificed to save for the down payment of the house. And yes, we saved a large lump sum of money for the down payment, but we also sacrificed because we didn't have information like this way back when we first started, we got together at what? I was 17, he was 19. But we bought our first house at 24. Like, imagine if we would have had this information back then and we had the vehicle and we were saving. We probably could have bought a couple of houses. We probably could have bought a couple of houses versus just the one because of time. So, yeah, so now, I mean, your kids started at a younger age, so I could only imagine by the time they're grown, like 18, 20, or whenever that time comes, what they've got. But I'm like, even for my boys, I'm like, oh, yes, that's what we're doing. Right.
And we're in a perfect month, right? August, back to school month, back to school expenses. Imagine customizing a policy that we thought originally was just for a death benefit. Now we're customizing a plan. So let me take out $1,000 to pay for our back to school expenses, clothes, the backpacks, the books, whatever, the shoes, right? Whatever the case is, have that sitting there for you. Right. And as you use that money, it's still working and growing for you in the policy because you never withdraw it. Right. You borrow against the death benefit. So this is where customizing everything comes into play again. But just knowing that you're saving for something that you can now utilize before you pass away. Right. Absolutely. Before college. What about their first car?
That part. We got a lot of parents that are co-signing for their kids, and now they're co-signing, so now that debt is on their credit report. Yep. Not to mention, if that kid can't pay the bill, now you as parents got to pay the bill because you don't want that late payment on your credit report, but now you want to go make some moves, but you can't because your debt-to-income ratio is off. We can eliminate all of that. Yep. By securing a policy at an early age.
That's it. And when you go to buy a car, right, you're given options of, hey, here's your interest rates. Also, here's your terms. 4-year, 5-year, 6, 7-year. I don't know the max terms. But when you borrow money from your policy, there is no term. Right? You could take 10 years to pay it back. That means, not talking about kid car, but when you buy a Mercedes for yourself, $80,000, $100,000, you could pay that Mercedes back $200 at a time, right, back into your policy. Yeah, there's no loan term, right? You are the bank. The company chooses the interest, but you are the bank. You choose the terms, how you want to pay it back. Maybe you want to take a month off or a year off, and then you start paying yourself back. So
when I see all these people on the internet flexing their fancy cars, I'm thinking like, how they get that car?
Yep.
9 times out of 10, they probably doing it like this.
Yep. And again, well,
yes.
Everyone say cash is king, right? Cash is king, and so they flex and want to buy everything cash, right? But if cash is king, why do you want to give it away, right? Keep it, right? Put it in the policy.
Yep.
It's now not going anywhere. It's compounding for the rest of your life, and then you borrow other people's money, right? Typically, we're used to borrowing from lenders. Or when you borrow money from your policy, you're borrowing it from the insurance reserves, right? So this is where, again, understanding what that language really means and how it can benefit you and showing you all the different options. Right?
Oh, yeah.
Sweet 16, quinceañeras, right? Those are so expensive costs. Some people do, right? We're on a different level since hanging out with Eva now. We're talking about for holidays, we're traveling now.
Yes.
Like, I'm serious. My son, Grayson, it's been a huge time. We're going to have him on a podcast.
Grayson, he's going to be on the next
Oh,
podcast.
man. He's so funny. I feel like he's my entrepreneur.
Yes.
He's like, hey, Dad, for my birthday this year, can we go to Xcaret?
Yeah.
Can we go back to Mexico? Like, he really enjoys now. I'm like, if that's what you want, like, we can take you. Let's make a plan. Not worry about parties and gifts, because some parties can get expensive, hundreds of dollars.
Lots of
toys included, all 1,000 maybe, So it starts, and all that is just forgot about in weeks, right? Just like their presents, their Christmas and everything. So now if we save correctly, we take money out of the policy, let's go on vacation.
Man, it's so crazy because, I know a few days ago, Mateo was like, Mom, I can't wait to go to Xcaret. Y'all, if you need that Xcaret plug, let me know.
Yes.
Let us know. We got the plug.
Oh,
but
man.
he's like, oh, I can't wait. I can't wait to have the tacos. I can't wait to go zip lining. But I don't want to do the water park. And but just to have that type of language in our household.
Yeah.
Like, I know my boys are learning. They may be funny on film sometimes, but just that really pulls my heartstrings.
Yeah.
Because again, those extravagant trips y'all be seeing, chances are, for me, banks are paying for it. Rewards, free flights. We're being our own bank to invest in experiences and building memories with our families that are gonna last a lifetime. Like, guys, like this is the thing. This is the thing. So let's transition into, because we got a lot of followers that are entrepreneurs, investors, business owners. That, man, you guys, you're working so hard to build these businesses and to invest with the traditional information. Now we got this information that we need you to leverage. So talk to the people.
Yeah. So this is what I specialize. This is what I most of my clients have been, at least in the most recent couple of years, business owners, investors, entrepreneurs, right? Because we're speaking a different language, right? We want that wealthy type of mindset and people who are open to understanding how to leverage, and they want to learn how to leverage their money, right? So with business owners, investors, I mean, imagine how challenging business was for business owners in the last 2-3 years with COVID. Right. And a lot of them were forced to take out, if they didn't qualify for that PPP loan, but qualified to take out regular loans. And when they take out loans to expand their business, those loan payments are required right away every single month before business even expanded, meaning before they got the profits back. Right. So what I show a lot of business owners, how they can structure their policy to borrow money from it to expand their business and not have to pay those loans back until business sees a profit.
That's huge.
Right? Again, just leveraging, learning how, they already know how to leverage, right? They leverage other people to work with them as a business.
Yep.
So now they're leveraging their policy, have their money work for them in two places, right? Now investors, right? A lot of real estate investors utilize private money lending, hard money lending.
Oh my God, those terms. Y'all are investors have ever borrowed private money. Like, I'm thankful it's a tool. And it was the first tool I used when I started my first real estate investment project in Chicago. But man, the things they don't tell you, like you borrow money for 6 months. And back then mine was at 11% for 6 months, fixing and flipping a property that, hopefully at 4 months, but no more than 6 months. But then you got like the city, and then it goes past 6 months, and now you got to pay a loan extension fee, like a big fee to make it another 6 months on top of more interest.
Let me ask you, during those 6 months, were you paying a monthly payment back towards that loan?
Yes. Yeah. While the property was being rehabbed, I had to still make monthly payments. And I'm like, I borrowed money at 10%, making monthly payments. Like, this project better make me some money, because right now we struggling. We on the struggle bus. That was $1,200 a month. Wow. $1,200 a month. Yeah. Man, but...
Yeah, so
we got information.
When I talk to real estate investors or investors in general, right? It doesn't have to only be real estate. I use real estate because everyone understands real estate, whether it's residential investments. But as you mentioned, you leverage a hard money lender, private money lender. Depending on your credit, you can get a 10% loan or 15% loan. Whatever it is, it's much higher than if you were to borrow money from your policy to invest. Right on top of that, when you borrow money, put the down payment down, borrow the private reserve money, right? You have to make a monthly payment on that money, on that loan. Yep. With the policy, not only are you leveraging your money, you're borrowing it so it can stay in the policy and not work in the property. There's no obligated monthly payment plan on the money you're borrowing. So what's happening is you're borrowing money, you're relaxing, I guess. You're not stressing over every single payment. There's no term on, hey, it has to be done in 6 months, 1 year, 2 years. No, you just let it sit. When the investment comes back, when you profit, right? The money comes back, then you pay back that loan, pay yourself back, right? And then you dump the profits in the policy and rinse and repeat and keep going. Yeah. Right? And qualifying for lending becomes easy because that's an asset.
You don't even have to qualify. Yeah. It's you.
Right?
And I don't know how. There's a lot of people out there that, your credit score, you don't have to have a high credit score for private money. You just got to show this, this, and this. You show this, and this, you can still be declined. Here, you don't deny yourself. Yeah. You got it. It's automatic lending.
Yeah. Yeah.
It's crazy.
Yeah. And a lot of hard money lenders, all they're doing is leveraging other banks, right? Other tools.
They just borrowed the money. They're borrowing it from them at 6%, charging you 10 to 15%. Man.
Yep. They borrow from
everybody making money, not you. We not losing it, but a lot of people are losing money.
Yeah. Yeah. So again, this is being just equipped with the right tools, with the right information. Again, we don't want this to be YouTube University, right? Get the information and learn how to start applying it. If you don't understand it right away, that's okay. I didn't understand a lot of this in the first year when I was licensed. Right? It took time to really understand, develop, and understand how to fully customize plans like this. These are advanced cases, right? So again, whatever you don't understand, I always urge people to get the information, right? Set up a call, set up a meeting, understand what does this mean, write down questions, and really understand how do we start working on something to utilize our policy like a bank.
Yeah, and this is why it's so important to work with the right people, the right professionals that actually care and customize and listen to your wants, listen to your desires. But most importantly, people like us, like you may think like this, but people like us, we're like, no, we got to take it up a notch. We got to take it up another notch because we know and we've seen what these things can do. We do this for our own selves. Like, we're not just talking just to talk. Like, we are testimonials of these policies and how it works and how to leverage. You want to share with the audience about how you use this to start a business?
Yeah, I've actually, every example I'm sharing, I've done. Every example I'm sharing, I've helped a client do. So I'm always a big component of do it yourself, and then you can teach it, right? You can't just teach something you don't do, right? You can't work at...
You can, but them people are...
Yeah, it's right? You can't work at Mercedes and drive a Honda. Like, well, what are you doing? What are you driving? Why should I get this Mercedes if you're in a Honda? Why wouldn't I go over there and get a Honda, right? So, I actually utilized my policy to buy a third car for us, but a second car for Turo. Right, for those who don't know who Turo is like your Airbnb, but for cars, right? It's a platform where you can rent cars out. And it's crazy because I didn't even think about this business until I found a problem, right? With any great business, you want to solve a solution for people. And at the time, I was renting a lot from Enterprise, and I would make a reservation Friday, 4 p.m., get there, and my car wasn't there.
Oh,
like, what's the point of making reservations if you're not going to hold my car? I wasn't late. I was early. I was on time. And they didn't have my car. So I was without a car for the weekend. It was very stressful and frustrating. So I was like, okay, let me solve this frustration and look into Turo. Right, got one car, tested it out, was doing great. All right, let me get my second car. Let me look at my policy. And so I pulled out money, $20,000 from my policy to buy the car. My second car was a Hyundai, right? And so if I would have used my bank account to buy that car, cash, I wouldn't have profited anything. I would have just took the money out and gave it away.
Yep.
Like every time we spend money, we give it away. Cash is king. Keep that with you, right? The policy, it compounds there. So if I would have withdrew it, gave it away, I own the car. So I put the $20,000 in my policy first. The following week, when I found the car I wanted, borrowed that $20,000, so that $20,000 stays in the policy, keeps growing, and borrowed the money to buy the car. Right? Since that car was an investment, as Turo rents it out and commissions come back, I'm using commissions to pay back that loan. Right? So now my money in essence is working. That $20,000 is working on Turo and in my policy in two different places at one time.
Money on top of money on top of money.
Yeah. Yep.
And like we ain't gonna even go into like all the write-offs and the tax benefits by structuring in a certain way.
It goes deep, right? We talk about more than just life. Like I always feel like our goal is to add value. Yes. Right. And so every time I leave somebody with a meeting or conversation, my goal is just to add value. And we ever heard of that concept of own nothing but control everything? Right? That part. That's where we showed people how to own nothing but control everything and start incorporating trusts, right? Just like life insurance, we understand the protection part of a trust, right? Protects us from probate. If we pass away, house gets passed down, no inheritance tax for the kids, right? But goes even deeper, right? When you start learning about the different kind of trusts, what the wealthy people do, utilizing these business trusts, family trusts, charitable trusts, private family foundations, it gets deeper, right? But just to make it short, like basically you could just move money from entity to entity to entity and basically reduce your taxable income in a lot more options than our Social Security would allow us, but also than an LLC would allow us. Man. Right? And again, we're partnered with the right people to give you that information. Yep. Again, we're only life licensed, so I'm not here to recommend, give advice in that space, but refer over to the expert.
Absolutely.
Right? Like Eva's doing, right? Her lane is financial coach, credit coach, everything in that space. And when it comes to life, she brings the expert in there to share, to speak life, right? Speak life into you guys. But as you business owners out there, right, this is where we're looking to expand our Turo business. And I'm like, okay, time to elevate, time to delegate. Yeah. Talk to our oldest, right? Talk to our oldest daughter. Yes. She's 13. I'm like, look, we're not going to be home. I need you. So Harry, let me back up. We were going to take my Camry to the airport when we went to our company trip on vacation. That would have been 12, 13 days or something like that. 13 days locked up at an airport. That means out of Turo commission. So I talked to my wife and said, hey, babe, could we please take the Suburban, leave the Camry there to make it available for Turo. And that allowed me to have our oldest daughter, Jordan, to be available for as my assistant. And because it was available, people came, right? People came to rent the car out. I think she prepped the car 5 or 6 times between both vehicles. And now we're looking to let me get a third or fourth car. And by doing that, let me also look at what it would look like making our oldest our assistant for Turo.
That's right.
Right. And
put her on payroll.
That's it. Put her on payroll. Or again, have my trust pay into her policy. And that's considered a trust expense and reduces our taxable income. But it also teaches her how to run a business. Right. So that's what we're talking about right now in the household is figuring out how do we want to go about this business as a teaching way, but also helping her save for the future.
Because the traditional way of thinking is, yes, depending upon how your company is structured, you in essence can hire your children and pay them and get some tax breaks. Or you can structure trusts in a certain way to not only get some breaks, but actually like really elevate and really like keep more money in your pocket and less money over there. It is
giving you options. Like
insane.
Yeah, Eric Thomas talked about at Phenomenal Live, the show Ozark, right? How many of you guys ever seen that show Ozark?
I know. It's still on my to-do list.
You got to do. I know we don't want entertainment to distract us too much, but set an hour aside, right? 1 hour a night. It might hook you to 2 hours. I don't know. But anyway, Ozark, the entertaining side of it is talking about money laundering and drug cartel.
Wow.
Right? And they're partnered with the financial advisor to get him to work for the cartel and hide all this money illegally. But the way he does it legally, the deeper message is leveraging trust, private family foundations, and churches.
Wow.
And so once you understand, again, the deeper side to all the trust and how you can own nothing but still control everything, and with our, it allows you to keep more money in your pocket, and you can donate a lot more out to the community by making sure all your entities are in the right place.
Man.
Right?
That's a whole nother episode.
Yeah.
That's a whole another episode. But that is actually going to be a future coaching call to all of the Lions in the Lion Legacy group.
Yes.
Because we bring in the outside professionals that have helped us elevate, that have helped us structure things accordingly to maximize all of our wealth building opportunities. Man, this is good.
Yeah. No,
I know it's probably too much. But guys, these are the things that you need to think about. These are the things that you need to consider. These are the things that we talk about. Like, this is like our everyday language while we eating lunch or at dinner or when we're out traveling or we're networking. And it sometimes can be intimidating if you don't know. But this is why I stay in my lane and I do what I do. And I'm like, okay, now we got this looking good. Okay, now it's time. Let's hand you off to David. And then hand him off to David. David, blah, 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 blah. And then now we hand off to the bigger dogs. So, man, thank you.
Yes, it was.
Thank you.
I love it. This is my language. This is my lane. I love, again, bringing more value to policies. Everything we talked about today was a death benefit policy, right? But we don't talk about death. We figure out how do we utilize this within. And then when it is our time, our money will multiply and pass down and bless the next kids, the next legacy, the next generation.
Yes. And then you structure them trusts properly. Now we're building 5 generations deep.
That's it.
Right there, guys. That right there. That's another podcast. But thank you so much for your time again, David.
Pleasure.
It's been amazing. But we got another episode with David. So stay tuned. Next week we bringing him back because we're going to talk about something else that this industry and this tool has really brought to our lives. So with that being said, guys, if we've added value, do not forget, like, subscribe, share this on all your social media platforms. Let's get this information out so that we can change lives. And most importantly, help you live life on your own terms. Bye, guys.
Take a look at what you see, what I become. It ain't hard to tell. Young legend, I'm an icon.